Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Today we wrap up our multi-episode series on the road ahead. We're picking the brains of some smart folks and finding out what they're watching, what they see right now, and where we may be headed. Today, an opinionated and popular friend of ours is going to share some things you aren't going to want to miss. Peter Schiff, today on the Real Estate Guys radio program.
Stop for a moment. Why are you listening to this show? Are you dreaming of a bigger, brighter financial future? More personal freedom to live life on your own terms? What if there was just one skill that could make it happen? There is. Sales. Robert Kiyosaki says every entrepreneur must be good at sales. It's true for investors too. Sales is how you attract money, people, and opportunities. Sales is the skill used to negotiate deals and lead your team. Sales skills are essential to success. The good news is, it's a learnable skill. The great news is, we've created a 2-day interactive workshop to teach those skills to you. Make plans today to attend How to Win Funds and Influence People, Mastering the Art of Financial Selling. For dates and details, send an email to sales@realestateguysradio.com or visit realestateguysradio.com and look under events. Gain the skills you need to succeed. Email sales@realestateguysradio.com. or look under the events tab at realestateguysradio.com.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Joining me, as usual, our co-host and financial strategist, Russell Gray.
Hey, Robert.
You know, every beginning of the year, we like to pull together our friends and talk about what they're thinking about and looking for and watching, and it really expanded from a show or two this year into this entire series on the road ahead. And we'll wrap it up today with a guest who always increases our listenership. Every time we have this guy on, it's crazy what happens to the downloads.
Well, it's interesting because 2 years ago, we were heading into the COVID-19 shutdown, and 2020, everything locked down and isolation and all that. And so we convened a panel of our big brain friends and did the crisis investing video series. It's still on our YouTube channel. And Peter's video had something like 900,000 downloads. So he was super popular. And, back then we were all looking at, oh my gosh, what's going to happen with the economy? And it was kind of like a road ahead based on the context of the coronavirus. Now we're looking at what's going on in the economy in terms of the dollar and inflation. The cat's really out of the bag. We talked about that on last year's summit that, hey, we didn't think this inflation was going to be transitory. We didn't think the inflation was just going to be a little bit of a blip, but it was this big whale that had built up all this momentum and was going to be cresting the surface. And when that nose of that whale broke, it was going to go way out. And sure enough, that's exactly what's happening. And part of the reason we've been able to have that kind of foresight is because we listen to guys like Peter, and he brings so much to the table in terms of his understanding of the way the system works and thinking outside of just the mainstream narrative, I guess you'd say, when it comes to how the financial news is delivered.
Well, so much so that Peter is often lambasted by lots of the conventional media folks about his perma-bear status. When he's at our events, I like to joke by introducing Peter as having predicted 19 of the last 2 recessions, because he always is talking about the sky may be falling. But I'll tell you what, better to be prepared early than to be trampled at the exit doors late. And Peter is a no-nonsense guy. We don't have him on the program because it juices our numbers. We have him on the program because he's become a great friend and because he always has an insight that has you think. As I listen to his show, his podcast is great. And people say he's always saying the same thing. Well, not exactly the same thing. He has nuances, and like you, Russ, he draws great analogies that are, I think, easy to understand. So you listen to a lot of these guys, and they're hard to follow because of all of their financial ease. But Peter, I think, explains it in kind of a no-nonsense way.
Absolutely. And that's one of my favorite things about him, and we're not Johnny-come-lately when it comes to being Peter Schiff fans. We sought Peter out in the wake of the 2008 financial crisis because he wrote Crash Proof in 2006, basically predicting the crisis, and got it right for the right reasons. And so his update of that book, Crash Proof 2.0, was a postmortem on what happened in the GFC and why he was right. And so we started hanging out with him, inviting him on our summit. We now consider him to be a regular contributor to the Real Estate Guys program, both in video and in our podcast and radio show. And he is got a basic thesis. He's got a basic premise that the financial system is fundamentally flawed, that the dollar is fundamentally doomed, that the Fed is painted into a corner and has no choice but to sacrifice the dollar. And so you've heard some of that from us over the last several years. And a big part of that understanding has come from Peter. Now, the fact that it hasn't all happened yet doesn't mean it's not happening. If you're watching a slow motion train wreck, a glacier, an asteroid coming at Earth, from hundreds of millions of miles away, you can see the train wreck coming. You can see the disaster coming, but it's not here. And just because it doesn't come right away doesn't mean that the basic thesis is wrong. And in fact, I would tend to agree that Peter's basic thesis is right. And over time, little by little, the evidence that is being presented by what's happening in the real world is corroborating his basic thesis. And so I think you'd be foolish not to listen to him, whether you agree or not, and it would be wise to take a position where if he is right, you are in a position to benefit from it rather than be steamrolled by it. I wish I would have listened better to the people who were issuing warnings pre-GFC just to have a plan B. Again, better to be prepared and not have a crisis than have a crisis and not be prepared.
We can absolutely say that Peter Schiff has helped us become more prepared. Peter began his investment career with Shearson Lehman Brothers back in 1987. He's been at Euro Pacific Capital for nearly a quarter of a century. He's widely recognized through his television appearances on all the major networks and plenty of financial and political news outlets. In his book Crash Proof, he accurately predicted the 2008 financial crisis in writing for the exact reasons it happened, which is how we met Peter. Today, you'll get his latest insights and thoughts as he ponders the road ahead on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
When it comes to successful rental property investing, it pays to be picky. Pick the right markets, pick profitable properties, and pick great property management. That's easier said than done, but we've got great news. Jerry Kerr and his rockstar team at Mid-South Homebuyers are going strong in Memphis, Tennessee, and Little Rock, Arkansas, too. So for a top-notch turnkey single-family home rental property, whether you're a new investor or have a large portfolio already, pick Terry Kerr and Mid-South for a truly A-plus investing experience. To learn more, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a U-bit time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill U-bit, and help you pay way less taxes. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to eqrp@realestateguysradio.com today.
Hi, everyone. This is Jim Rickers, the author of The New Case for Gold, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, now in our 26th year of broadcast, and there is always something to talk about. It's the final episode in our series, The Road Ahead, and joining us to enlighten us and scare us to death, it's our friend Peter Schiff. Hey, Peter.
Hey, how's it going, Robert?
It's good. It's good to see you. And I know you've been watching the craziness. I guess before we talk about big picture of what's coming down the pike, this last couple of weeks has been intense.
Yeah, well, there's been a lot of volatility, obviously, surrounding what's going on in Europe with Russia, Ukraine. A lot of volatility today, incredible rally in a lot of these beaten down European names, particularly some of the German stocks. But, what was going on before this? We were having a very quiet yet powerful rotation out of overpriced momentum tech type stocks into value dividend paying stocks, mostly European stocks, also Asian, but out of the US. And we had a temporary shift in that with what's going on in Russia. But I think that that trend is going to be here for a long time. I think the air is coming out of the bubble. what's really driving it is inflation. We have a huge inflation problem that has finally manifested itself in a way that people finally understand it. I mean, it's been with us for many, many years. You and I have been talking about all the inflation that the Federal Reserve has been creating. We've seen it move into, financial assets, stocks, bonds, real estate. But now we see it in a major way in commodities, consumer prices, and this is just getting started. And so the Fed is not going to be able to have the ultra loose monetary policy of the past. I mean, it's going to be tightening, but we're not going from easy to tight. We're going from loose to less loose. But that's still not enough monetary heroin to sustain some of these bubbles. So I think the tech stocks and these, meme stocks and cryptocurrencies, they're coming down, and money's going to be moving into real assets. Gold basically hit a new record high or almost yesterday. It got up to about 2,075-ish or so. We're right around 2,000 an ounce right now in the price of gold. So we're, very close to record highs, but this is just getting started. I mean, look at some of these other metals. The nickel price has doubled in a matter of a day or two. Copper is at an all-time record high. Everything. I mean, look at grain prices just going ballistic, wheat in particular. But all this is not just about Russia. Oil got up to $130 a barrel, but, we're headed higher. I mean, we're pulling back now, but the trend is up in these commodities.
Well, and one of the things people should realize by now is when gasoline goes up at the pump, it affects pretty much every single thing we buy because everything has to be transported somewhere.
Yeah, well, we have record high trade deficits right now. I mean, they've gone just completely ballistic, but everything we import, we also have to transport, and we have to pay the cost of getting the stuff from China to here. And then when it arrives at some port in Long Beach or Los Angeles, it still has to make its way to other parts of the country.
Right.
So it's got to be put on a truck. Not only do you have to pay for all the gas, but you got to pay the trucker. Everything is getting expensive. The prices are going up. Yeah, we're going to be living with massive inflation. This is going to be part of the American experience now, is going to be prices just going up. We got used to stable prices for a while, or even prices that were going down a little bit. Not anymore. Everything's going to get a lot more expensive.
Well, and let's talk about what the effect is of that on housing. On the positive side, everybody on paper has their house worth more pretty much everywhere in the U.S. Every market is up, but that's what happens when you print trillions. On the other hand, as prices go up, houses become out of the reach of folks. And if we use the past as any indication, it slows down the market. What do you think there?
Yeah. Well, first of all, people's houses are a lot higher in price, but the maintenance costs are going up, the insurance costs are going up, the taxes are going up. You actually pay those costs. So just because your house has a higher number on it, I mean, if you don't sell the house, really, what difference does it make? What does make a difference are the bills you actually have to pay.
Right.
So if you're paying more to heat your house or to maintain it. I mean, the craziest thing is I'm experiencing it now in Puerto Rico. I mean, this is like, you've never seen anything like it. I mean, my house is 7x what I paid, 7 times.
Wow.
Yeah. I mean, it is really nuts. And same thing with my condo. It's like 5-6 times. I mean, we're talking about huge numbers, but I talk to a lot of people who are living in houses, and maybe they paid, on the lower end, people paid 1 to 2 million, and now they're worth maybe 10. And in my neighborhood, you pay 4 or 5 million, and your house is worth 30, 40 million, based on what people are paying. And it's like, well, are you going to sell? I've had the discussions with Lauren, like, oh, she definitely doesn't want to sell the condo when, we don't use that much. But I mean, these things have gone from, 3-4 million to 20 million. Because that's just what people are paying. Like, the last couple of sales on my street in the last month have been about $40 million sales. And, I paid the high price when I bought my house for 5.5 or 5. That was a record.
Yeah.
So That the vacant lots, a friend of mine sold his vacant lot for 10 million. That he bought it for 2 and flipped it for 10. It's just a lot, and it takes you 3 or 4 years to build on it though, because you can't get the materials, you can't get the workers. But the houses are way up. But if you're not going to sell, it really, what does it do? But now people that I used to encourage to come move here, they can't move here anymore.
Yeah.
The family, you can't, you got to be a crypto billionaire to afford a house. Now, the good news is those crypto billionaires aren't going to be billionaires much longer. They may not even be millionaires. So maybe some of these houses are going to come back on the market, because a lot of the big sales, the $40-50 million sales and up, are crypto people buying.
Yep.
But, even I talk to people in other parts of the country. It's not just Puerto Rico. Puerto Rico is like the epitome. But real estate prices are way up in lots of cities. And the problem is the replacement costs. Try to build something, the materials, the labor, and then just getting stuff, getting parts that you need. I mean, just little projects that we're doing around the house here, stuff takes forever to get parts. You want to get appliances even, or things like that. I mean, things that you used to be able to just buy. Now you've got 6 months to a year wait to get stuff. Wait till you see what happens just with regular stuff, just toiletries, toothpaste, deodorant, shaving cream, mouthwash, toilet paper. All this stuff is going to get very, very expensive. Clothing is going to be one of the next ones to go. I mean, not just because the materials, cotton and different stuff, but the labor costs. I mean, everything. And then the transportation costs. Americans have been living on cheap imports for a long time. We've got record trade deficits, but the dollar hasn't collapsed yet. But we're on the verge of that. I mean, that's got to be the next leg, is when the dollar's gotten a bit of a reprieve here with Russia. The dollar index had a big rally. The euro sold off. So that's kind of helped cushion the blow, but that's not going to be here for long. But, they were talking about transitory inflation. The only thing transitory was that we were going from low inflation to really high inflation, because the high inflation is here to stay and it's going to get worse.
Perpetual transitory inflation, and it compounds because people are having a hard time still getting good labor across the board. And, we just had an experience at a big event and it was sold out, and the hotel did the best job they could, but they weren't staffed enough. Yeah. And they confided in us that they were just having a difficulty finding people to work. Yeah. And that exacerbates the whole thing. Where do you see that headed? I mean, if we're going to have inflation everywhere, eventually that works itself into wages, doesn't it?
Well, it already is. But the problem is, too, that when the government gives people a good deal where they just send you money not to work, most people prefer leisure to work. So to get somebody to forego getting paid not to work, you got to pay them a lot of more money to work.
Right.
But, I do think that more people are going to be entering the workforce. Unfortunately, it's a lot of people who are now retired. They're going to have to start working because they're not going to be able to pay the bills. They're not going to be able to continue to pay for heat or air conditioner or things like that, or everything's going to get more expensive, and Social Security is not going to keep pace with it. People's annuities, or if you've got any kind of fixed income, it's just going to get decimated. The Fed is acting as if they can fight this inflation, and Powell is like, well, I'm going to do whatever it takes. But no, he's not, because he also said that he's going to be careful not to hurt the economy. Well, if you're going to do whatever it takes, you're going to hurt the economy. And if you're going to be careful not to hurt the economy, then you're not going to do whatever it takes, because we actually have a bubble economy. That's the problem. And you can't get rid of the inflation without pricking the bubble. And we have decades of mistakes that we have to atone for. We have been kicking this can down the road for a long time because we didn't want to deal with these problems. Well, if we want to stop inflation, then we have to deal with these problems, because it means a massive collapse in the credit market, assets, stocks, real estate, everything's come crashing down because we can't afford to service the enormity of debt that we have. So if we fight inflation, we have to default on the debt. And that has huge meanings for the people who are owed the money. And that's a game changer. But of course, if we don't default on the debt, we're going to inflate it away. So it's not like the creditors are going to get paid. They're going to get screwed one way or the other. The only question is which way.
Well, and we talked about that last time where you were looking ahead saying, well, the Fed's going to go ahead and increase rates, and you weren't sure that was really going to happen. We're right at the precipice of that. What's your take now? They're going to have to raise a little, and is that just to make good on the PR or what?
Yeah, it would be kind of a big deal if they didn't even do the liftoff, right? The quarter point hike. There was some speculation they may do 50 basis points, but now they're certainly going to do 25. But even 100 would be too little, too late. I mean, what difference does it make if inflation is 7.5%? And in fact, we're going to get the CPI numbers tomorrow, and the year-over-year numbers should move up to about 8%. But if you want to know the actual rate, you pretty much have to double it. So you figure we got 16% inflation. But even if you accept the government's version on face value, which is a stretch, but if you do, and you say we got 8% inflation, well, if you move interest rates from 0 to 25 basis points, I mean, what difference does that make? You still have rates that are dramatically negative. So it's not like somebody who was thinking about borrowing money is going to not do it because of that extra quarter point. When inflation is 8%, they're still getting paid a lot of money to go out and borrow money. We need positive real interest rates. If the inflation rate is 8, we need to be at least at 10, if not 12. So if you're just, screwing around between 1 and 2 or 3 and pretending that you're making any kind of difference just because it's not as low as it was, you're still talking about extremely low rates, which are highly stimulative, even if they're not as stimulative as they were. It's not like you're going to put out a fire by pouring less gasoline on it.
Right.
And, you got to do something different. You got to put water on the fire. And that means we need real interest rates, positive real interest rates. But that's never going to happen because nobody can afford to pay. But, you're in the real estate. I mean, think about this aspect of the CPI. About 1/3 of the CPI is supposed to be housing. Yet they don't use housing prices that like they used to, that are up 18% on year over year. They don't use rent, which would be a proxy. I mean, rents are up 14, 15, 16% over the last year.
More in some places, yeah.
They decided to use something called owner's equivalent rent, which is neither houses nor rent. It's just a made up number that they just come up with out of thin air. And they decided that that's up 4.5% over the last year. And that's 1/3 of the CPI, which is housing, because, people generally spend about 1/3 of their income on their rent or their house. So that's why it's a big number. But if you're just going to put 4.5 in there, if they used the actual rents, we would be well above 10% in the official CPI number, just making that correction alone.
You can figure that math out yourself. You just take 4% out and then add whatever your market has appreciated, and boom, and you're still not counting food and a lot of the things that are going up in price that aren't in the CPI.
Yeah, well, they're in there, but they have a way of massaging the numbers, with hedonics and substitution, and so that it doesn't really have the full effect. But if you just look at the things that you're buying, I mean, a lot of times you can buy something and you can look if you're replacing something that still has a price tag, like you're replacing your toothpaste, your deodorant. You can see there was a price on it the last time you bought it, and look at the price now. I mean, you're looking at 20, 30, 40% higher prices. If you go to restaurants where you kind of have remember what you used to pay for something, and now look at what you're paying for it now. But I mean, even look at used cars. I mean, you talk about a 40% increase. I mean, you can actually sell a car that you bought last year, that you drove for a year and put miles on, and you could turn around and sell it for more than you paid for it.
Right.
I
That's
mean,
true.
When has that ever happened?
Yeah, that's crazy. Well, obviously, there's a lot to think about concurrently. And, you spend a lot of time looking forward. And what are the big picture things you'll be watching in the months ahead as we round out this year?
Well, I'm still waiting for a breakdown in the bond market in a bigger way, a breakdown in the dollar, a realization on the part of the markets that inflation is here to stay and that the Fed is not going to do anything about it. Because why are people buying 10-year treasuries at 1.8%?
Right.
I mean, what's the odds that inflation averages less than 1.8% over the next 10 years when you're already at 8, by the government number? Bonds are a lousy deal. You're losing money. Inflation is killing you. And a lot of people pay taxes on their bonds. You get 1.5%, 2% interest, and then you pay tax on that.
Yeah.
And inflation is so much higher than that. So bonds have to really go down. Rates have to really go up. More realistic inflation premiums have to be built into the yield curve. And, that's a game changer when you have all this debt. The dollar has to crack. I mean, the dollar has been defying gravity as we print record trade deficit after record trade deficit. And we have $3 trillion a year budget deficits, and we're not even in a recession yet. I mean, imagine what's going to happen to the federal budget in the next recession, because it's not like we're not going to have one.
Right.
In fact, if the Fed raises rates even one time, that might be enough. Even a quarter point could tip us into recession. But I think if it's not the rate hikes that push us into recession, it's the hikes in the price of food, in the price of gasoline. Because if people are spending all this money on their food, on their gas, on their electricity, on their rent, where are they getting the money to buy anything else?
Yeah.
And if you make your living selling anything else, how are you going to keep your job if the customers are spending all their money on food and they have nothing left over for whatever, you're selling them?
Well, it's a good point. The example you gave about going to your favorite restaurant, as prices go up, you probably go less, which means there's less business. No one's saying, hey, prices are up, let's go more often to the restaurant. People are doing things to save. People are cutting out unnecessary trips because gas has gone up measurably.
Yeah.
Now, when it goes up little by little, we don't notice, like inflation. But boy, everyone's taking notice today.
Yeah, people aren't going to be going out. Look, they're not going to the movies. It's too expensive. The tickets now, you're about like $20 for an adult ticket. So a couple, or you take a date to the movies, and that's $40. You haven't even bought popcorn or a soda. And then, you got to drive there. So people are just going to stay at home, I think what's going to happen too with these streaming services, now you got so many streaming services, but people can't afford 5 or 10 of these things, most people. So what they're going to do, I think, is people are just going to have one at a time. You're going to sign up for Netflix, and then you'll watch everything that you want to watch. You'll binge it all. And when you're done, you'll cancel and you'll go over to HBO Max and you'll watch that. And then maybe you go to Paramount Plus and see what they got and turn that one off. And then maybe the Disney Channel. I mean, because nobody's locked in on these things for a long-term contract. So I think a lot of these companies are going to realize they're all sharing the same pie. Everybody's going to get a little piece. They're all counting on making all this money from the same customer base. The customer base doesn't have all that money. They're spending it on food. They're spending it on their rent. So I think the whole standard of living in the U.S. is going to ratchet down as a result of this. And, the problem is going to be, how is the government going to respond? Are they going to come up with even more government programs that are going to drive the living standards even lower? Because, Biden was talking about how, he wants to fight inflation by lowering costs. The government doesn't lower costs. The government increases costs. The government passes regulations and taxes, and that's additional costs.
Right.
And then the Fed prints money. I mean, so they're just creating inflation as fast as they can.
Our guest today is Peter Schiff. He's the author of several great books, and we're going to give away one of those as we play Real Estate Trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
As real estate investors, it's no secret that the real estate guys love Florida, and the Sunshine State continues to receive more than its fair share of businesses and population relocating from the Northeast, which has created a huge opportunity for real estate investors. So come join Russ and me in mid-August for our Jacksonville, Palm Coast, Ocala field trip. On this highly interactive trip, you'll get an up-close, hands-on, personal experience you'd be hard-pressed to find elsewhere. You'll feel the vibrancy of the markets, observe the quality of the infrastructure, and truly get a sense for the demographics, all things you just can't do by simply searching online. Plus, we'll introduce you to our Boots on the Ground team, and you'll meet some amazing investors from all over. To reserve your spot, go to realestateguysradio.com and click Events, where you'll find the Jacksonville field trip. There's a big difference between researching a market from afar and seeing it with your own eyes. So join the Real Estate Guys as we explore not one, but 3 amazing real estate markets. Go to realestateguysradio.com and click Events for the Jacksonville, Palm Coast, Ocala field trip. See you there.
Hi, this is Dennis Waitley, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio show. Thanks for tuning into the program today. We completely sold out the secrets of successful syndication in early March. So if you didn't get in, make plans now to join us in mid-September in Dallas, Texas. All the details are on the website at realestateguysradio.com. Under events, it's the road ahead. We're talking to our friend and economist, Peter Schiff. Before we get back to that conversation, it's time to play real estate trivia. We're going to ask you a question that has something to do with real estate, and the first person that gets it right is going to win one of Peter's awesome books, The Real Crash, America's Coming Bankruptcy and How to Save Yourself and Your Country. It's a big old hardcover book, and it could be yours if you know today's real estate trivia question. Last week on the Real Estate Guys, we had Danielle DiMartino Booth with us, and we asked this: which U.S. state has the most registered motor vehicles? Well, the answer is the big state of California, followed by Texas and Florida. By the way, California also has the most registered electric vehicles in the U.S. Here's our real estate trivia question for this week. For many years, Peter and his wife Lauren have made their home in Puerto Rico. Here's what I want to know. Puerto Rico boasts the largest and most extensive rum factory in the world. What's it called? Yeah, biggest rum factory in the world is in Puerto Rico, which is probably enough reason to go visit. What's the name of that rum factory? If you know or want to take a guess, send your best guess to trivia@realestateguysradio.com. Include your name, the answer to the question, and your physical mailing address so we can send you Peter's awesome book, The Real Crash. That's today's real estate trivia question. Our guest is Peter Schiff. It's the final episode of The Road Ahead for 2022. Peter, for years, you have had an investment strategy which has taken into consideration some of this stuff, right? Good foreign companies, dividend-paying companies. Looking ahead, we're seeing gold rise and, their whole conversation that gold would be higher if it wasn't for the money that went into cryptocurrency. And crypto's erratic. Gold has been fairly steady. What's an investor to do in times like this, Peter?
Well, it's hard to say exactly how much demand has been siphoned from gold to Bitcoin or other cryptos.
Right.
To the extent that it has been siphoned over there, the bigger impact has been on pushing Bitcoin price higher, not keeping the price of gold lower. So it's had a much bigger impact. So let's say 5% of the investment demand for gold has been diverted to Bitcoin. The impact on Bitcoin from that is far greater than the impact on gold.
Yeah.
But I certainly think anybody who's looking at Bitcoin and gold now can clearly see that the two have nothing in common. I mean, they have nothing in common from a tangible perspective. I mean, gold's a metal. Gold can be used in jewelry, in industry. It's an actual commodity. Bitcoin is nothing. Bitcoin doesn't have any real world use case. So in that respect, it's not gold at all. I mean, you could say, is it a digital version of gold in that, you can make it look like a gold coin? Well, in a way, you could say I have a digital house and it could look like a house, but, you can't live in it. It doesn't provide shelter. It doesn't keep you warm. It doesn't keep you dry. You can't raise your kids in your digital house unless you just got digital kids. But yeah, I mean, digital gold is not gold. But Bitcoin doesn't even trade like gold. In fact, it's the opposite. Whenever gold is up, Bitcoin is down. I mean, if you're a digital version of something, you should at least be correlated to that something. But gold is a safe haven. It's a store of value. Bitcoin is just a speculative token where you can't store value because you have no value that you can store. I mean, Bitcoin has a price, but you can't store price. Price is just subject to the vagaries of the market. It's supply and demand. It's whether people want to buy Bitcoin. If they want to buy it, it'll have a price. If they don't want to buy it, it won't. So I think you're certainly seeing the big divergence in the two assets and how they behave in a portfolio. And so I think that to the extent people were buying Bitcoin as a proxy for gold, they're going to stop doing that. The people who want to speculate in Bitcoin as opposed to buying AMC or GameStop, yeah, they may keep buying it because they like the action, but it is not an inflation hedge or a store of value. And once you realize that it's neither of those things, then it's nothing because you're buying it as a speculation, but you have to be speculating on something. There has to be something, viable and concrete that you're speculating on. But to just buy something because you think other people are going to buy it, and why will they buy it? Well, because they think other people are going to buy it. If you were to start a chain letter, it's illegal. If you put something in the mail and you say, hey, send me $10 and send this email to send this letter to a friend and ask him for $10, right? It's actually illegal to do a chain letter. But if you put it on the blockchain, suddenly it's legal, right? Because that's really what these are, chain letters, pyramid schemes. Eventually it's just going to collapse. I think we may have seen the peak. We'll see. Bitcoin was up at 69,000. Now it's around 40,000. So most people who bought Bitcoin are losing. So don't think everybody's making money in Bitcoin.
The very few that made money in Bitcoin are buying houses on your street.
That's right. And they're cashing out. They're selling their Bitcoin. This is a seller's market, just like it's probably a seller's market for Dorado houses. I just, I don't want to move. I like it here. So I'm just hoping I make enough money working that I don't care about the tens of millions I'm going to give up when my house crashes.
Well, earlier, Peter, you talked about folks that are retired, right? And the part of the reason they're going to have a hard go of it is they retired based on what the dollar was worth then. So, they have their Social Security and the retirement benefits, but all that was based on yesterday's dollar. And all of a sudden now everything's more expensive. Had those people, and many of them did, invest in the metals. The metals were at a very different price then. So, you've taught us for a long time that gold is really a hedge in that regard. And here we're seeing it. And it hasn't been as erratic. So I think for folks that haven't thought about the metals, this is a time. But is this in any way too late to get into the metals now?
No, not at all. Because, keeping things in perspective, first of all, gold is around where it was in 2011.
Yeah.
Right. The same high, not, pretty close. Think about all the money that exists now that didn't exist in 2011. I mean, the Fed's balance sheet was like $1 trillion back then or something like that. Now it's $9 trillion.
Yeah.
So we've created a lot more money than we've mined gold. So the gold supply has gone up small compared to the money supply. I mean, there's not that many things that you can buy today at the 2011 price. So I think gold is still cheap, not only relative to where it's been historically, but if you understand the monetary policies that we are going to be pursuing in the future, the massive deficit and debt monetization, despite the fact that the FOMC guys, Powell, just like Bernanke, deny that the Federal Reserve is monetizing the debt. I mean, Powell said, well, it's only monetizing the debt if the central bank intends to keep the debt. Well, intentions don't mean crap. I mean, what matters is what you are doing. And they are keeping the debt. I don't care what they intended to do when they bought it. They ain't selling it. The balance sheet keeps getting bigger.
Yeah.
So they're monetizing the debt. And the debt's going to get bigger and bigger. And there's going to be a lot more money printed to monetize it. So the price of gold is going much, much higher because the value of the dollar is going down. The price at $2,000 an ounce is still very cheap compared to where it should be and where it's headed. But it's not just gold that's going up. I mean, copper, nickel, zinc, all the metals, and then oil, natural gas, but then corn, wheat, soybeans, cocoa, sugar, coffee. Everything you want to buy is going to go up. At least if you have gold, you can afford to buy that stuff because gold goes up too. But if you just have paper, everything you want to buy is getting more expensive. But what you have to pay for it isn't. So you're just losing out.
Well, and at some point, inflation already is showing up in everything, and people that weren't paying attention and couldn't be bothered before are noticing, and it's going to get worse before it gets better. We see that, you see that. We could be wrong, and I hope we are, but I'm guessing we're going to see the price of the pump continue to go up. So what happens then?
Well, first of all, it's going to get worse before it gets even worse. Looking at the point where it's going to get better, that is so far in the distance that there's no point in even talking about it because nobody can see beyond this mountain to that valley. It is too far. First the Federal Reserve pretended that we didn't have enough inflation, right? That was their goal. Inflation is too low. We need more, right? And which was a lie. And then they said, oh, okay, we kind of have enough and everything looks good. And then as inflation got worse and worse, they were saying, well, it's transitory. Don't worry about it. It'll go away. Prices are a little bit higher than we'd like, but it's all okay because it's transitory. Now, they're no longer pretending that we don't have enough inflation. They're conceding that it's too high, but they're pretending that they're going to do something about it. They're pretending they're going to fight it, but they're not, right? It's just like they were pretending it was transitory when it clearly wasn't. The reason they pretended it was transitory was because they couldn't fight it. So rather than admit that they couldn't fight the inflation, they just assured us that it would go away on its own. But now that didn't happen, and now they're bluffing that they're going to fight inflation. Well, they can't. They can't fight it now for the same reason they couldn't fight it in the past. And in fact, there's even more reasons that they can't fight it now because it's worse. It's bigger. The reason the Fed didn't want to fight inflation a year or two ago was because it didn't want to have to raise rates and hurt the economy. So now to fight inflation, they'd have to raise rates even more and hurt the economy even more because they waited too long. Well, if they weren't going to do it back then, why would they do it now? Just these are the same people and they have the same fears about the negative consequences. These guys want to be liked. They don't want to jack up rates and have all the markets crash and everybody storming the Federal Reserve with their pitchforks, let's kill them, because, they raise rates. Like, when the villagers were coming to get Frankenstein's monster.
Well, and maybe that's a closer analogy than we'd like to think. All right, good stuff. Hey, if you enjoy what you've heard today, make sure you're listening to the Peter Schiff Show. You can do that at all your favorite podcast outlets. Peter, we appreciate your insight. Thanks for being with us today.
Yeah, appreciate what you guys are doing. And yeah, definitely tune in to Peter Schiff Show podcasts. They're getting more and more important because the mainstream media is just completely wrong about everything that they say. They have no idea what's going on. They never did. They don't understand the problems. They think the Fed is solving them. They don't get the fact that the Fed is the source of the problems and that its policies continue to make them worse. But my investment strategy has really been coming into vogue. You know, my funds have gone from last place to first place. You go back now and, you know, we're number one over the last 3, 4, 5 years. You know, we used to be in last place and, you know, now we're in first because we're moving out of momentum into value. But what's really going to kick my funds into a new gear is going to be the dollar going down and then the real big move up in the price of gold. So before that happens, people should try to get positioned in my funds, or I have a feeling once we really put some distance between the gold price in 2000, a lot more buyers are going to show up. But I always like buying lower, you know, and I don't think gold's got much downside risk from here. You know, any dip is getting bought. There's some big money buying. You know, the Chinese, now that they had a good whiff of what we did to Russia, you know, imagine you're China, you're sitting on like $3 trillion. And Russia is getting punished and having their dollars frozen or confiscated because they did something that the U.S. doesn't like. And you're China thinking, you know, we're going to do a whole bunch of stuff that the U.S. doesn't like.
Yeah.
We don't want to have all these dollars in U.S. treasuries. Well, if they're going to sell their dollars, what are they going to buy? They're going to buy gold, right? That's where they're going. They're not going to go to the euro because they could be just as screwed with the euro. You know, they're putting sanctions on. So I think they want to get themselves into a more self-sustaining position where they're not beholden to foreign governments or central banks for access to the U.S. SWIFT system or anything else. So, you know, they're going to be moving out of dollars and into gold. So before that happens, you know, you can front run that trade because it's a monster.
Good stuff as always. All right, my friend, great catching up with you, and we'll see you next time.
All right, Robert, take care.
There's Peter Schiff. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from August 26th to 29th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 15 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful, the people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. Demand for offshore real estate has skyrocketed since the coronavirus shutdown, and with retirees looking for lifestyle, the work-from-home workforce able to be productive from afar, and tourism coming back strong, now may be the perfect time to consider Belize as a place to diversify risk in your investment portfolio. There's all types of opportunity in Belize when it comes to real estate investing, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and real estate contracts are in English. And at Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me in August in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on events where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, August 26th to 29th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under events, and I look forward to seeing you in beautiful Belize.
Hi guys, my name is George Gammon from the Rebel Capitalist Show, and you are listening to the Real Estate Guys, my favorite podcast when it comes to macroeconomics and real estate investing.
And welcome back to the Real Estate Guys radio program. Thanks so much for tuning into the show. If you've wanted to have more influence, if you want to be able to move the needle in your business or sales career, come on out to How to Win Funds and Influence People, our 2-day workshop on sales. And it's the cool kind of sales, belly to belly, consultative selling. If you sell a product like investing in a real estate syndication, you're going to want to be at this event. All the details on the website at realestateguysradio.com under events. Well, my goodness, what a great way to wrap up the Road Ahead series with Peter Schiff.
Yeah, Peter made some really, really good points. I just want to hit them real quickly. Number one, he talked about a rotation in the investing world out of momentum stocks, really where you're kind of betting on the bright future, to value stocks. Warren Buffett famously said, when the recession comes, when the tide recedes, you get to find out who's swimming naked. In other words, who doesn't have good fundamentals. Warren Buffett, of course, is famous for being a good fundamental investor. We see this. We see money moving into things that are real, like real estate. REITs have been a top performer. You see cap rates in apartments still coming down, and that means more money coming into the apartment space. Residential real estate in particular. We've been talking for a dozen years on this program since the great financial crisis about how important it is to be in things that are real and are essential. He obviously talked about commodities and oil, energy in particular. And Chris Martenson, our good friend, has taught us that energy is the economy. There's no economy without energy. You're not going to have any economic activity unless there's energy. And if the cost of that energy has 4x'd like it has in the last couple of years or however long it's been, then that's going to have an impact. And I think, Robert, you brought that point up in the conversation with Peter, and it's a great point. At some point, this all lands on Main Street. And for real estate investors, it lands on Main Street tenants who don't have savings, who don't have things on their balance sheet where they're benefiting from inflation. They're 100% being victimized by it. And so even though you may think, hey, inflation means that wages are coming up and we're going to be able to raise rents, it also means that food and gas and all the staples of life are coming up. And pretty soon people are going to have to start to cut out some things. So it's just important that you be sensitive to what this looks like for the people who are being victimized by it. We like inflation as investors, real estate investors in particular, because we get to use leverage, but our tenants don't. And so we just need to be very, very careful at this time to really know who our tenant base is, how they're being affected by this, and whether or not we really can go press rents in a market like this where purchasing power is deteriorating in real terms.
You know, all of the folks we've had on the Road Ahead series have had interesting things to say, and hopefully you can listen to what they're saying while you're setting aside some of your personal beliefs. You know, Peter's very strong on cryptocurrency in a negative way. He's not a fan. We were there the first night he learned about it all those years ago, and he was fighting the idea then, and he's fought it ever since. So if you're a crypto person, you know, just set that to the side or have an intellectual argument with Peter, or maybe he won you over. I don't know. But my point is, he is opinionated, but he's also a guy worth paying attention to. And we appreciate hearing from Peter today. If you'd like to learn more about what Peter does in terms of managing accounts and helping folks and even some of the research, just send an email to Schiff, Schiff, Schiff at realestateguysradio.com, and we'll connect you to some of the great research they do and some of the ways that you can engage Peter's firms. The other thing is, it's always good to get out and be at places where Peter will be. Peter has been to every one of our investor summits since we met him, except for one, and he's almost always at the New Orleans Investment Conference. That is coming up in October. We are going to be there for sure.
Yes, the New Orleans Investment Conference is our adopted investment conference. So we do our annual investor summit, which is now currently sold out. And then the next one that we do is the New Orleans Investment Conference. And of course, we're famous for throwing the big party that everybody comes to. And our friends like Peter Schiff, Brian London, the host of the conference, Dana Samuelson, our good friend in the gold business, and many other people all come to that party. And we all get a chance to hang out and talk shop after we've been in the conference for 2 or 3 days. It goes on usually for 4 days. And so it's a great place to meet people. It's a great place to expand your mind and understanding. And even though we're a real estate program and our people are real estate investors, really real estate is the foundation of a real asset investing portfolio. And you really do have to understand the precious metals market, in my opinion, because it's a reflection of what's going on with the dollar. And if you're generating rents in dollars, if you're borrowing, getting mortgages in dollars, if you're denominating your net worth and your equity in dollars, and you don't have a plan B or even an understanding of the things that go on with the dollar, gold people pay a lot of attention to the currency markets because they're hedging against it. And so it's not about making money with gold. It's about protecting yourself from a collapse of the dollar. And right now, inflation, by definition, is a collapse of the dollar. So if you've never cared about precious metals before, now's the time to start paying attention. And the New Orleans Investment Conference is a great place to come to kind of get anchored into what's going on in that space.
Brian London's the host, and he certainly has an emphasis on the metals, but it's a lot bigger picture than that. Really real assets in general. You learn about oil and gas, a lot of real estate there as well, and lots of different economic forecasters and newsletter writers and economists and folks that are household names in many ways. If you'd like to get early on the list, just send an email to neworleans@realestateguysradio.com. That'll get you all the details about the conference and the special invitation to the Real Estate Guys party. New Orleans at realestateguysradio.com. That wraps up our series on the road ahead. Although we're always looking down the future, we appreciate all the amazing folks that shared with us over these past weeks. We have some awesome shows coming up next. Oh my goodness, we've got some brand new guests who you're going to love, who have never been on our show before, and you're not going to want to miss them. All you have to do is stay tuned to the Real Estate Guys. Until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.